Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently I have been getting loads of requests to look at this company that we're going to talk about today, and I'm really excited to talk about this because this is one of the newest companies in my portfolio, and that with the company we're talking about today is Novo Nordisk. This is a Danish company with history basically dating almost back to 1923. It specializes research and development, manufacturing pharmaceutical products, particularly focusing on chronic diseases. And what we want to do now is just basically give you an overview of what the company does. Then we will talk about if the company is profitable. We'll talk about revenue side of things. We could talk about the cost of that revenue. We'll talk about the debt levels, and then we'll look at the valuation side of things at the end of the video. And at the end of the video, I'm going to share with you guys what I have been doing with this company over the last few weeks because I've made some massive changes. So I'll share that with you guys, inshallah. Right, if you haven't liked the video already, please do, because it genuinely takes a lot of time and effort to put these videos together, and also at the same time it really genuinely helps the channel to actually reach out to a lot more brothers and sisters out there. Now, as you can see here, this is basically the company. Everything you see here in terms of money wise is actually reported in Danish krone, so basically that's just bear that in mind. It's not in USD. Now, one of the main products this company has, or drugs it has, is Ozempic, which is basically a GLP-1 which is used for diabetes and so on. And they also have the insulin part. They have the obesity care, and the main ones is the basically Wegovy. All of these basically products are these two, especially here, Wegovy and the Ozempic or GLP-1s, are both right now. Despite this being for diabetes, basically this is also used for basically weight loss as well, basically because it generally helps basically people lose weight as well. Regarding the diabetes side of things, the company is basically the leading producer of insulin and other diabetes-related medications. Its portfolio includes various insulin formulations and delivery devices, such as pre-filled and smart insulin pens. And the obesity side of things, like I've already said, it basically develops this product called Wegovy for weight management. These treatments have gained basically significant attention due to their effectiveness in aiding basically weight loss, and it's become one of their main products lately. And they also have the rare disease side of things. So of course, with regards to the type of product that the company has, it seems to be in the right industry, because if you think about it, weight loss is quite important. Diabetes is very important again. One of the things that we're going to do is just talk about the financial side of things. But if you want to learn more about the company, if you work in this industry, it will probably be easier for you. I don't work in that industry, so I don't know much about it. And in terms of growth expectations, the other competitions, we know Eli Lilly is basically their main competitor, especially for the GLP-1s products. So we will see how things develop over the next whatever years, and we will look at the financial side of things, and we would also look at the analysts who look at this company, who understand the business model and where things are heading and the numbers and then what is needed and so on. So we'll dig deeper in terms of financial side of things, but in understanding what products they sell, who they sell it to, and so on, then of course you can do all that research yourself. But as you can see here, in terms of gross profit, in terms of operating margins and so on, it seems very healthy. But let's now look at in more details this company. If we just click summary, for example, one of the reasons I started buying recently is because it has come down quite a bit. For 1 year, it's down almost 50%, over 50%. A year to date, 28%, and the last 6 months, it done 45%. Okay, $57 is basically the lowest it's been so far. 62 is where it is at right now. And as you can see here, Wall Street and Seeking Alpha analysts are both saying it's a buy. In fact, I'm just going to quote very quickly show you. We have basically 4 strong buys, 2 buys, basically 4 holds, 1 buy and one sell, and 1 strong sell. But they're expecting about 60% upside from where we are currently, so which is very interesting. But let's look at the financials for this company, because this is the important part. Now, since 2015, the company has reported 15.7. Again, this we're talking about in USD, so $15.7 billion to right now $40.3 billion, which is absolutely huge growth. And now, cost of that revenue, they made 40 billion, the cost of that revenue was only $6 billion, and gross profit of basically $34 billion. That's why basically you see this massive gross profit here, which is very interesting, right? And then of course the company spends a lot of time in selling those products, to the research and development side of things. And then we get to the net income, which is basically what's left after all of this, is basically $14 billion. Now in terms of revenue, in terms of EPS or earnings per share, you can see from just less than $1 to right now $3.15 over the last basically 10 years, which is absolutely amazing to see. Now the other thing I also look for when I'm doing this basic analysis is to look at the balance sheet, and I want to see if this company has a lot of debt, and also if they can cover their current liabilities against their current assets. So total current assets basically is $22 billion right now, against basically total current liabilities of $30 billion. So they have more current liabilities than actually current basically assets, which is interesting. But when we look at the total assets, which is $64.7 billion against the total liabilities of $44 billion, that's covered. So in the long term, basically the things are not absolutely fine. But next 12 months or so on, okay, things are not great at the moment. So they have more debt, the current debt, than actually liabilities than current assets. But when we look at the long-term debt, which is basically here, total debt, which is about $14 billion, that has increased basically last since 2014. Will be interesting to see why that has happened. Is it because they spend a lot more on money on research and development, or is it something else? So it will be interesting to find out basically a bit more about why that has increased massively. Just looking at the free cash flow here, you can see from $4 billion to right now $8.6 billion of free cash flow. So it seems the free cash flow has increased basically over the that period of time. There's been a slight decline in 2023, but then it bounced back to basically $8.6 billion, which is absolutely fine. Now, just let's look at some more information about the company. Like right now, it has a dividend basically, which is safe. 99% is the highest. 2.6 is basically what you will get as a yield. 273 billion market cap. AA minus basically when it comes to credit rating, so that's a very strong, which is basically means the company has can cover any debt that company has and all of that stuff. There's nothing to worry about in terms of company becoming completely bankrupt or whatever. In terms of payout ratio for the dividends, we're looking about 49%, which is absolutely fine. When it comes to the increase of that dividend, it's been there's 28 years of increase in that dividend, which is really good. Latest increase was almost 22%, and the last 5 years they've increased that for 22%, which is really good. 10 years of 16.4, so it's probably one of the fastest growing. They have one of the fastest growing dividends over the last whatever years, and like I said, 28 years without basically an increase in every single year, which is absolutely amazing, and 28 years without a reduction. Now you get $1.862 of every share of this company that you own, and is, by the way, they pay it semi-annually. Okay, now there's a bit more information I want to share with you guys. We've seen in terms of the earnings per share growing every single year, which is absolutely amazing. Free cash flow per share is also heading the right direction. When it comes to shares outstanding, it's declining. Total sales is heading the right direction. I think this is in Danish, I think, because 290 billion. I can't imagine that being US dollars. Yeah, I'm sure that is. Return on equity, we're looking at about 81%, return on invested capital 44%, operating margins of 48%, and free cash flow margin of 28%. Now, like we've seen already, the debt levels is very, very low for this company for in the long run. So absolutely nothing to worry about in terms of basically the company where it's at now. The next question is it cheap enough for us to actually look at the company? Okay, and this is what I'm going to use right now. I'm going to use this, and I'm going to use Morningstar valuation. But let's just start with Morningstar valuation first, because that tells me. So Refinitiv Ratings basically is saying it's about almost to 60% undervalued at the moment. They're expecting the price to be almost $100 per share. Now TipRank, for example, and it's also saying it is a hold right now, 2 buys, 5 holds, and 1 sell, $83, but that's about 25% upside from where we are now. Looking at Morningstar, 4 stars right now. It has a wide moat, and basically $89 per share is where they think the price should be, and that's basically right now is about 62. So it's still cheap based on this. Let's now look at basically using a valuation method using fast graph. Now, as you can see, the maximum, so this is the black line here is the price. So if we remove that, this is basically the earnings for this company. The orange line, that's the earnings growth for the whatever years. And as you can see, it's been going up every single year, which is what you want to see, that earnings growth basically going up every year. And they are expected, the dotted lines is basically for the next 3 years, so they are expected to grow, which is really good. Now if we add the price, as you can see, normally the price supposed to follow the earnings of the company, but this company has always been overvalued quite a lot of time. I think it was around here, when was that, 2016, it was slightly cheap. If you had bought around 2016 and hold it up until basically 2024 and sold it, you would have made about $10,000 that you've invested would have been $91,000, or you would have made 34% in total annualized rate of return, which is absolutely amazing. And this is why valuation really matters, because if you had bought the opposite, if you bought it when it was actually had a PE of 48, okay, remember the normal PE for this company over the last whatever years has been about 24. However, if you bought it when it's double that, 48, okay, and sold it right now when you actually went down, you would have lost about 61%, or even 6 or closer to £6,000 dollars of your money of that 10,000. So this is why valuation is important, especially buying these high growth companies that you think is going to go to the moon. You can easily lose money. So if you had bought this stock in 2011 when it was also slightly cheaper at that point, sold it when it went basically about 48 PE, you would have made about 23% when it comes to annualized rate of return, or 149,000 USD, which is absolutely ridiculous, right? Now looking, if we shorten that period of time, you can see it still seems undervalued. Even if we shorten that, basically right now it seems undervalued. So the normal PE for this company has been over the last 5 years, it's been about 25. If it goes back to that level, okay, if it goes back to that level, you're making about 37 basically percent rate of total annualized rate of return, which is really amazing, right? Now forecast is important because we want to see if this company is heading the right direction, because when you're buying a stock, you're buying it so the earnings are going to go up, the revenue is going to go up, and for that reason you're buying it just for the growth side of things, right? So if you bought it right now with the estimates basically being the fair value basic ratio being about, let's call it about 19, which is that line there, for the next 3 years you would have made about 23%, almost to 24%. So if you invested 10,000 today and everything works out perfectly based on the analyst expectations, so remember this information comes from these analysts here, that there's 29 of them looking at it right now, and they're saying 2025 we're expecting the growth to be about 20, EPS to grow about 30%, next year about 20%, the following year about 18%. If all of that happens and they are correct, you would be making about 24% rate of return. So your 10,000 would have been about 17,667 US dollars. Now if you then use the normal PE for this company, what the market has traded, which is 30, right, which is that line there, then you would expect it to receive about 47% rate of return moving forward, okay, which is absolutely amazing. So it looks absolutely fine. The company pays dividends, so I'm going to quickly look at the free cash flow and see if the free cash flow basically covers, okay, the dividend. So I'm not worried about, I'm not using it as a valuation. I just want to see if this gold line, okay, is basically orange line, sorry, on the top here is higher than the orange line, which is basically so nothing to worry about, basically covering that dividends and the fact that the company seems undervalued. Now what I'm going to do is show you exactly what I've done over the last few weeks. As always, please don't take my word for it. Do your own research. Make sure you understand what you're invested in, because anything can happen. If the stock market goes down tomorrow, I'm buying more because I really like the business and I see where it's heading. but are you in that same situation? And if you're not, please don't do it. Okay, as you can see, I've now got 80 shares of this company. I'm down about 11%. I've basically invested quite a bit of money so far, and I have been actually trying to reduce my average. My average right now is $69 per share, so I am still buying. And my plan is to buy one share of this company every week moving forward until I hit that 100 mark, and that's what I'm going to do. So I've got 20 more shares to buy. If it keeps going down, I will be buying even more every single week until I hit that 100 shares. Now, we've seen the company over the last whatever years, basically was at one point was $340 per share. Can you imagine when if it goes back to that situation, even when? Okay, and yeah, so I'm not really concerned about what's going to happen. I'm not saying it will go back to $140 per share next month. It could go actually down even further. Okay, even you go back here, potentially this line here could even go further than that. It could actually come here, around here, which is basically a possibility. So if it comes down even more, then I will be buying more of that, because that means the company is slightly cheaper, the dividend yield will be a lot higher, and in the long run, I'm probably, if I hold it for the next 10-15 years, potentially I wouldn't even, in 10 years, I'm sure this company will be a lot higher based on the market. It is basically, it's in the fact that it's the GLP-1s drugs are basically, everyone needs it these days, especially in countries like the US and so on, and especially with the obesity side of things. So yeah, I don't know. Only Allah knows what's going to happen, but in my opinion, I think this company is undervalued at the moment, and I will be buying more of it, inshallah, in the next few weeks, and I will let you guys know. As always, please don't take this as a financial advice. Do your research, like the video, subscribe to the channel, join us in the Patreon account if you can as well. Have a wonderful day. Assalamu Alaikum.